Good evening, everyone. As usual, every day we are focusing on sharing some knowledge with our community 21 days, 21 insights. Today, we are going to talk about quick directions for small business owners before the year end. So, being a small business owner, the life is not easy. You have to go through a lot of stress, lot of pressure throughout the year. You put so much of effort in building your business, but if you don't spend some decent size of time before end of this year, you might be losing a lot of money on the table. So IRS already by this time, because we are on December 13th, IRS already knows how much taxes you may owe them. But the last 2 weeks could be a game changer if you can take some actions before December 31st. The first and most one which I want to talk about is prepay the right expenses. Before December 31st, IRS allows you to pay some expenses in advance, which could be for the next 1 year. Like example, you need to pay some software renewals, or you might need to pay your accountant, CPAs, chartered accountants, or financial advisors, or you might need to pay to the marketing and advertising contracts, or a business insurance, or a professional memberships. Instead of paying in the beginning of the year, January or February, if you can find a way, if you can pay it in advance by December 31st, and if you are maintaining the books of accounts on the cash basis, then you can claim all those expenses as a tax deductible this year. And you can, of course, yes, you are deferring, it's not a direct actual tax savings, but you are deferring your tax liabilities to the future period. For now, you are optimizing your taxes. Then the next one which I want to talk about is write off of expenses. If you before December 31st, if you would like to spend some money on repairs and maintenance, or buying some equipments, or buying some office supplies, or buying some office furniture, or doing some upgrades in your office infrastructure, all those expenses are 100% tax deductible before this year end. So if you're thinking about any expansion, or from the infrastructure perspective, it's time for you. Don't wait till January. Just spend that money before December 31st and improve your expand or scale your businesses by having a bigger or by reinvesting into your businesses. Like example, if you're running a restaurant, you want to spend some money in improving your kitchen. It's time for you. If you're running a dental clinic, if you need to spend some money for equipments to clean gents clients teeth, invest there. If you're running a commercial property and if you need to have an HVAC equipment, invest there. Those investments are tax deductible in the year, in this year itself, 100%. So because of a lot of recent tax changes. And number three, vehicles and equipment. Vehicles, if you're trying to buy a new vehicle on the business name, it could be the time right now. Before December 31st, if you are buying any vehicle which is more than 6,000 pounds, you can claim 100% tax deduction on the value of the property if it is on your title is on your business name. If it is on the lease, you won't be able to claim that deduction. Retirement plans. Till you have time to contribute to your 401k, SEP IRA, simple IRA, or solo 401k, including your IRA. Don't miss any of these retirement options. Explore it, find out what is right for you, and try to expand and try to contribute before December 31st. And capital gains. If you're having any capital gains this year before December 31st, because what I noticed is a lot of business owners, when they have that extra cash, they are investing in the stock market. If you have any some good cash flow capital gains, look for see if you can optimize capital gains with capital losses by selling some loss making stock before December 30th. And run a tax projection. That means know about your tax bill now. Finalize your books of accounts. Finalize your financials. Look into all your transactions. Identify what is your total sales. Try to find out what could be your total sales for this year, what could be your total expenses, what could be the net profit, and how much taxes you owe to IRS. Only when you know this, then you can start working on the tax planning in the year before the year end. If you work on this, then you there won't be any surprises to you when you file your taxes. You know what is your tax bill. If you don't plan it now, it would be it would be a surprise, and you might need to run to arrange money. And the last and most important, meet your an accountant, CPA, or an advisor before December 31st. If you are meeting your an accountant or CPA or an accountant yearly one time at the time of filing your taxes, definitely you are leaving a lot of money on the table. How to meet your accountant or CPA before the year end, so that one time is for the filing taxes, for the file, and the second time you have to meet for the tax planning. You have time till now before December 31st to meet your an accountant and understand what can be done. If not your accountant, at least find a guy who can help you and bring the value for you. That's all. And thank you very much. Thanks for tuning in, as we are consistently trying and giving our best efforts to share, to spend at least 5 to 10 minutes every day to share our knowledge with the community. Every day, stay tuned and learn something new. We are trying to bring a habit of learning for 21 days. The 21 days, 21 is insights. Tomorrow, again at 5 p.m. CST, we will stay tuned for a next topic. And thank you very much and have fun this weekend. Bye.